So imagine having access to a million Bitcoin. We're talking tens of billions of dollars here. But knowing that if you don't move it in 5 years, the network will just permanently freeze it.
Right. It sounds crazy.
It does. Welcome to this deep dive, where our mission today is looking at this massive dilemma currently unfolding in Bitcoin. We're going from high-stakes derivatives friction to this existential technological threat that's basically forcing the community to choose between network survival and, foundational property rights.
Yeah, we are looking at a market that's currently just trapped by this high-stakes derivatives friction. But, the real story is that existential threat looming right behind it.
Exactly. So let's start with the immediate standstill near that $64,900 mark. It's a really tight defensive range, and the macro headwinds are just suffocating right now.
Oh, absolutely.
You've got the U.S. Treasury draining liquidity,
Right.
Borrowing $739 billion in Q3 just to cover deficits. Plus, the Fed is holding rates at 3.5 to 3.75%.
And that high cost of capital, it just pulls all the oxygen out of the broader market. And in the derivative space, well, the friction is extreme. Downside movement is effectively blocked by this $1.17 billion put wall sitting at the 60,000 strike price.
Which is essentially a massive cluster of options acting as a hard floor.
Right, exactly, a hard floor. But the upside is just as brutal. There's this massive 1,600 Bitcoin short position that's leveraged 40 times.
Wow.
Yeah, and they're getting aggressively squeezed. They've already eaten $146,000 in forced liquidation losses just trying to survive.
It's like a high-stakes tug-of-war inside a rapidly shrinking room.
Yeah.
The Treasury and the Fed are just, draining all the mud out of the pit. The cash is leaving the system, so buyers and sellers just have no capital to pull the price anywhere.
Right, and that lack of liquidity creates a highly fragile environment. And, a fragile market is the worst possible setup for what's coming next.
The fundamental threat to the network's security. Let's unpack this threat. So Google's quantum AI team just delivered a massive breakthrough. The physical qubits required to break elliptic curve, cryptography, just dropped from 20 million down to under 500,000.
Which is a staggering leap. To understand why that matters, we really have to look at how the cryptography works. Traditional computers would take millions of years to derive a private key from a public address because, well, they have to guess sequentially.
Right.
But a quantum computer doesn't guess sequentially. It solves the underlying prime factorization math almost instantly.
So instead of guessing a combination lock one number at a time, it just looks right through the metal.
Yeah, a very apt way to put it. At under 500,000 qubits, a capable quantum system could derive a private key from a public address in roughly 9 minutes.
Nice.
9 minutes. And currently, over 30% of the total Bitcoin supply, so that's 6.04 million coins, sits in vulnerable legacy addresses.
Wait. If a machine can crack a private key in 9 minutes, shouldn't the market be reacting with absolute panic 24/7 right now? Why is the price just ranging?
Well, the panic isn't in the price quite yet because there are software updates on the table. But those updates, they're currently tearing the developer community apart.
Yeah, let's get into those updates. So you have Bitcoin Improvement Proposal 360, or BIP 360. That introduces new quantum-safe address formats, which seems logical. But then there's BIP 361, which forces a really strict migration timeline.
Yeah, and Phase B of BIP 361 is where the civil war actually begins. It states that after 5 years, all legacy cryptographic signatures will be permanently invalidated.
Meaning if you don't move your funds to the new quantum-safe format in that specific 5-year window, they're frozen permanently. And that includes the 1.1 million dormant coins belonging to Satoshi Nakamoto. I have to push back here. Doesn't freezing dormant funds destroy the very concept of absolute, unseizable property rights that Bitcoin was founded upon? The rule has always been, if you hold your own keys, nobody can touch your asset.
Oh, it is a direct violation of the original ethos, no question. But the counter-argument relies on just pure mathematics. If the network doesn't freeze those legacy addresses, quantum-equipped bad actors will simply calculate the keys and steal them.
Right.
It's a choice between violating a philosophical principle or basically allowing the largest heist in history, draining a third of the total supply.
So they basically have to break the foundation to save the house.
Exactly. And while this philosophical battle plays out in the code, the market still has to navigate immediate hurdles. I mean, we have the incoming unemployment report with expectations it could hit 4.3%.
Oh, and add in the regulatory delays. The Digital Asset Market Clarity Act just got pushed back in the Senate until September, so there's just no immediate regulatory relief on the horizon at all.
The network is truly boxed in from both a macroeconomic and a technological standpoint.
Which brings us back to what this all means for you, listening and holding or watching this space. The short-term price action is suffocating, yeah, but the long-term question is really the one pulling the hardest. Think about this. What happens to the fundamental value and trust in a decentralized network if it has to break its own core tenets of unseizable property just to survive a technological leap?